I think, thanks, Parul. So I think there are two or three different aspects because, and something that we've seen on a year-on-year basis when it comes to, extension of return filing time, you've had parties going to or associations file writ petitions in various high court asking for extensions. So we've seen a similar move pan out where various parties have approached high courts for extension of time. Today, whether it's the high courts or whether it's the tribunal or Supreme Court, all of them are obviously under the whole lockdown. But having said that, what we have tried to do is that even prior to shutting down, they've tried to make it orderly. They've tried to ensure that even in terms of extensions and all, they have passed orders in terms of extension of limitation period across the board for filing of matters, whether before the High Court or ITAT. There is order from the Supreme Court on that particular issue, whereby they have essentially extended the limitation period under all statutes. At the same time, you've had the whether it's the High Court or whether it's the tribunals have come out saying that listen, please don't file the appeals at this point in time. Even if you do have to file appeals, we will ensure that we will take condonation of delay. We'll take the current situation into account, so don't worry about that. Similarly, on stay matters at this point in time, like what you had briefly mentioned, the ITAT was mentioning that they're going to they're willing to hear urgent matters through stay through WhatsApp or any digital means. But I think the expectation or the hope is that the government also does not, at this point in time, take any undue action or take any kind of recovery actions at this point in time, something that's a big practice the world over at this point in time. So that's really the expectation around that. What at this point in time, at least insofar as the courts are concerned, looks like at least all of them are going to be shut till April 14th as of now. We don't know whether it will get extended or not. And even insofar as urgent matters are concerned at this point in time, except in exceptional cases, not really hearing any of those matters. What I would sort of expect is that obviously once April 14 passes by, you're going to have both the tribunals and the High Court hearing matters. Again, trying to sort of make the distinction between urgent matters and not so urgent matters. So you're going to have that coming through again. But at least what I've seen is that whether it's been the Supreme Court or the High Court, they have been proactive till now, whether it is in terms of telling the government that why don't you, while we are not going to grant in, for example, a stay on particular procedural or substantive matters, we do expect the government to take the necessary action at this point in time in order to alleviate the pain for all taxpayers. That's something that we have seen across the board. And that's been the message that's been coming in from the judiciary in terms of being proactive. I think the second aspect, while we have discussed in terms of what measures the finance ministry has come out till now, and also in terms of how the courts have approached, is also there have been a large number of changes or fiscal measures which has been brought in by the Reserve Bank of India also. I think at this point in time, let me get in Ashish. Ashish, even a couple of hours back, we had the RBI announcing a series of reliefs. Why don't you just walk us through what have been the fiscal measures which have been introduced, whether by the RBI over the last couple of weeks?
Thanks, Rajesh. I think I'll first cover what the finance minister yesterday brought about in terms of the fiscal measures that are going to happen in the next few days. Firstly, there is an insurance scheme for health workers who have been provided who in government hospitals and healthcare centers. With an amount of rupees 50 lakhs for each one of them, if any of them meet with an accident in relation to COVID-19. Apart from that, a number of measures were introduced for the poor in the country and for women and senior citizens. Essentially, what the FM was saying was that each farmer would be given about 2,000 rupees during the month of April. there would be cash transfers made to women account holders, which would be about rupees 500 per month for the next 3 months. Under the Modi government had taken the initiative to provide gas cylinders to all poor families, and move away from the old system of using wood while cooking food. Now, in addition to that, they have said that in the next 3 months, they will be providing free gas cylinders to all these families, which would be about 8 crore families that they would be covering. In the organized sectors for daily wage earners who are earning less than 15,000 rupees, the government has gone ahead and said that the provident fund that the employer and employee need to put in every month would be funded by the government for the next 3 months. This is about 24% that needs to be put every month. 24% of the salaries, monthly salaries of these workers that will need to be put in by the government. For senior citizens who are above 60 years, widows, there is a plan to give 1,000 rupees per month for the next 3 years. Overall, these benefits cost the government approximately 1,70,000 crores, and provide them with cash transfers, gas cylinders, and insurance schemes also for the health workers. In respect of other poor people, the government has also gone ahead and said that whoever is getting free grains today will be given additional free grains for the next 3 months, so that poor people who will be affected most by this economic slowdown can live and be comfortable during these times. Apart from that, earlier today, the Reserve Bank of India made a number of changes to its policies, essentially allowing liquidity to the banks, which would then in turn help the people, the companies to then dip into this liquidity. And in the next 3 months, which is going to be a period where perhaps liquidity is going to be the biggest issue, cash crunch is going to be the biggest issue, to help with that. In terms of those measures, the first measure is the long-term repo operations, which they have increased, where now the banks can invest in other forms of securities up to 25% of total investment permitted. The cash reserve ratio, which the banks need to maintain on an everyday basis, has been reduced by 100 basis points and gone down to 3%. This will give banks the liquidity power of about 1,37,000 crores. The margin standing facility, which allows banks to borrow overnight at their discretion, is also, by dipping 2% into their statutory liquidity ratio, has also been increased, and now they can dip into these ratios to about 3% with immediate effect. The other measures that the Reserve Bank has come out with is the moratorium on the term loans. So all commercial banks, cooperative banks, NBFCs, financial institutions are being allowed a moratorium of 3 months on payment of installment in respect of all term loans starting outstanding March 1, 2020. On the interest on working capital facilities, there has also been a relaxation that has been given, which will allow a deferment of 3 months on payment of the interest on such facilities. With respect to working capital financing, the banks can go ahead and recalculate the drawing power by reducing the margins. And respect of all of these measures with respect to working capital and deferment of moratorium on the term loans, the Reserve Bank has said that it will not downgrade the credit. It will not adversely impact the credit history of the beneficiaries. Another important announcement by the Reserve Bank was with respect to banks being allowed to deal in offshore non-deliverable rupee derivative markets, which basically means that the government has now permitted banks in India which operate under the IFSC, the one that is there in Gujarat, and where a banking unit has been set up, they can participate in the NDF market with effect from June 1, 2020. This is effectively so that the rupee that has been degrading continuously can be given a little bit of a push. That's about the changes from the Reserve Bank and the Finance Ministry. that has taken place over the next couple of days. We hope, and it seemed like the message from the finance ministry that more measures will be taken up for the organized sector, for the corporate sector, in the coming few days, which we will be hopefully seeing and then sharing with you. So I think more at a global perspective, it's also important to see what other countries are doing. And at this stage, I'll call Shipra to tell us about what measures the other countries are taking. We are saying US, UK, Netherlands, Australia are doing a lot of things for the economy. Shipra, maybe you can chip in here.